Hey guys, Mike here. So we got a loaded week coming up. I'm going to get into the earnings and the news like right out of the gates. We'll also look at some of these stocks and the setups on the charts going in. Nobody can predict the earnings. So far, earnings have beat quite a bit, a very high percentage of companies. And now we got the big boys, the heavyweights coming up this week, many of them. Also, we'll look at where you're seeing just record inflows into certain stocks in this market as well. And then we'll get into the indexes at the very end for you guys. So starting off with the earnings, we normally do at the end, we'll do at the beginning because this is going to be the busiest earnings week we have right here. On Semi on Monday, Ford, Waste Management, that's the light day. Then we get to have some fun. Starting Tuesday, we'll have SoFi, PayPal, BP, McDonald's, Pfizer, Royal Caribbean, JetBlue, Crocs. Then after the bell, AMD, Google, Snap, Chipotle, Visa, First Solar, Reddit. Then come Wednesday, Eli Lilly, Caterpillar, Humana. And then go down, I don't see anything down there really. And then some big boys here. Microsoft after the bell, Meta, Coinbase, Robinhood, Etsy, Riot, Roku, Carvana, Starbucks. Holy smokes. Thursday, it doesn't stop there. Uber, Peloton, Merck, ConocoPhillips, SiriusXM, which is what I believe the one Warren Buffett keeps loading up on, MasterCard. And then after the bell, you're going to end up with Amazon, Apple, Intel, okay? And I forgot Norwegian Cruise Lines there in the morning on Thursday. And then on Friday, light day, Fubo, Chevron, and then ExxonMobil, and also Wayfair. I believe Dominion Energy is another one. And so you can see a loaded week, going to create a lot of volatility, and we'll see. I mean, this could push the markets to all-time highs, or obviously finally get a decent pullback depending on these earnings and how the markets accept them. So far, it's been pretty positive. Now, when you look at AMD, as far as the technical setup, I can't predict their earnings. You can see we got this balanced trend line support right there. We're above the 50 and the 100 right now. 200 is right above us. And so if we get good earnings, the market loves it. You're going to that shade area once again. Google, we've talked about, it's been this inverse head and shoulders right here. It needs to get above like 170 right there. You got that volume gap up to 176 right there. So you could get a nice burst up there. And that's all-time highs to the left where you got a couple of gap fills if the market loves what it sees. Then you got Amazon. We talked about this one. That's all-time highs over there. So it's only like 13 bucks away from that. That's when Jeff Bezos was selling like crazy. Again, above the 50, the 100, the 200. And if it breaks down, obviously we're going back to that shaded area right there beneath if they don't like the earnings. You look over here at Microsoft. This one right here has been breaking out. We talked about how it came down. It was already hitting the 0.79 fib, started to bounce. It's above the 200, the 50, and the 100 moving average now. It moves up. It's above this trend line. And so if you have, good earnings, it might even run up before earnings. You look around 441 right there, and then this ascending trend line, that's all-time highs to the left. The ascending trend line will come into play as well, anywhere from 450 to 460, just depending if it hits it, if it has good earnings, it starts to really run. And that trend line, which used to be support, going all the way back to 2022. And then it turned into resistance as we went through this sell-off. And so that will come into play, as you can see right there. And so we'll see what's going to happen with this one on earnings. See if they, because this one's been, playing the hot potato, right? It got the hot potato from Apple. Okay. Now, will it pass the hot potato on to Amazon and Google this week? We'll see. Apple, you can see right here, again, this trend line going back to August where it started to move up. It bounced over just the other day. Here's all-time highs right there, which is not that far. And so they could start just continue to kind of wedge this right here, waiting on earnings, which does come out, I believe, Thursday, as I showed you. If earnings comes up, like where can you reach to? And the levels, we'll put the Fibonacci on here to show you. I'm looking around like 242 right here with the Fibonacci on here, as you can see, to be the next level if things end up going good for earnings. If not, then you can look down at a possible 221 to be where it drops to. Now, when it comes to the data, again, loaded data here, okay? So Monday, you don't have to worry about anything. Tuesday, CB consumer confidence, JOLTS job openings. Wednesday, ADP non-informed payroll change, advanced GDP, pending home sales, crude oil inventories. One thing to understand, 16 of the last 19 non-farm payrolls have been marked down, as you can see by this chart right here. And even Jerome Powell said, the job numbers is basically garbage, okay? They've not been consistent at all. We've seen them revised down over and over and over. So we'll see what these numbers come out to be. And we go back over here, you can see starting Thursday right there, and the core PCE, employment cost index, unemployment claims are going to come out, personal income, personal spending, Chicago PMI, and then Friday, big one here, average hourly earnings, non-farm employment change, employment data, ISM manufacturing, and then ISM manufacturing prices. Now, when you look at where money's been going, you see a lot of record inflows going into gold and other type of metals ETFs, right? And you can see the big spike. I mean, it's just massive. Easily to understand why here. I don't do a lot of commodities, but I'll still show you the chart. I showed this in the past a long time ago. Again, 2020 rejection, 2022 rejection, 2023 rejection, 2024 multiple rejections, and then boom, explodes to all-time new highs. All right, so it's just waiting to explode. Same thing's basically happening to silver right here, where you're seeing this trend line come down. You get a 2020 rejection, 2021 rejection, 2023 rejection, 2023 rejection again, 2024. Now you're exploding higher. This one anywhere near all-time highs, by the way, unlike gold. Silver's different than gold. Okay, silver's used in everything. It's more industrial in a way. Gold's a whole different ball game. So, you know, we'll see. And you've heard a lot of people say they're long gold, they're long Bitcoin, they're long anything to do with inflation, right? It's all roads lead to inflation, supposedly, according to Paul Tudor Jones. Now, when you look over here, you can see this came out over the weekend where China plans on stimulating their economy. Supposedly in November, they're going to come out and actually announce some more. And so if they do that, we'll see. Obviously, Chinese stocks could pop again. You see Alibaba coming down right here. And a lot of people are going to point out if it breaks that level, probably 90s where it's heading to. If it does break that level, it's starting to bounce where it's at right now. But if that announcement gets held off to early November, you know, these stocks hadn't really been moving up, right, without the stimulus reports coming out. So if they announce a big one, you can see another pop. And so if you look at where, you know, pulling the fibs and where you start to see overnight stimulus every single night, right, and all those big gaps, it's down in the golden pocket right now. You know, could it drop to 0.79? That will put it around $90 a share. Sure, and we'll put into somewhat of a support level right there. And so we'll see. Let me know what you're doing with that one. A lot of other stocks will move up as well. Just Bob is one of the more popular ones I get asked about all the time. Looking at the indexes. Boy, what a crazy Friday it was. Let me tell you, we came up in this level we talked about, 584.48 or 584.50, rejected down hardcore, okay, rejected hardcore, as you can see. But we've held this trend line right here, okay, we've held this trend line. So this might be one of those wedging type of weeks, because if it breaks out, obviously, or breaks down, excuse me, 574.50 is where you're heading. But we could break above. But just look at this. Big move up, big gap up Friday. They ran it up overnight too, and then just gave it all back and then some, right? But what held twice? That ascending trend line we've talked about so many times. So that did hold when you pull out. You know, does it look like a huge rising wedge? Of course it does, right? I mean, no doubt about it. And so, you know, again, looking at where it could go, well, the top of that trend line is where it could go, right? Earnings for the big boys pay off this week, and we end up breaking that 584.50 right there. Yeah, I mean, that's pretty much where we're heading, all-time new high, no doubt, because you got your heaviest weighted stocks, right? But if we break down, then finally, the bears can actually continue to push, then yeah, watch for 574.50ish to hold. If that does not hold, then we come into some fun times where you'll get some good buying opportunity. But so far, the bears just hadn't been able to push this through, okay? Now, looking at the 21 EMA, so far it's held twice, right? It's usually a good one. Once you break the 21, get at least a candle close below it, you get a decent pullback, anywhere 3 to 5, maybe even 7%, maybe up to 10%, you never know. All right, QQQ, there's another one. Look at that candle. I mean, busted out, like, oh, we're going to all-time highs. Got, I mean, it was like 0.4% or something away, and then just completely sold down rest of the day right there. But it did break that 40.97.75. But it did break that 497.75 area right there, and it just exploded above it when it did. And yeah, we thought we were going all-time high, but they pulled that rug with a quickness. This has not hit that trend line yet. Again, 484.80 right there is going to be a level to watch because it intersects that trend line. And, you know, if we break the trend line, there's no doubt that little shade area down there, that gap. But most likely we'll probably get a feel on that. But right now, you know, until you break the trend line, it doesn't mean anything. We'll put these smaller gaps in here. This is what we got. Gap up on Friday. I believe this is the gap up on, what was that, Thursday right there. And so we got 2 gaps down below to fill. And so it's not going to take much to push the Qs to all-time highs just because of the weights. And so if you see Microsoft and Apple and NVIDIA gets on board and Tesla and all the others keep pushing, you'll finally see the Qs catch up. And that's what we talked about, what was it, a month, maybe 6 weeks ago. I said, let's see if the Qs finally play catch up. That's what the market loves to do, is to push up the indexes that are behind right now. You see that it's funny, the Dow's selling off, and so money's rotating into these Qs to try to push them up. And we're going to see if that's going to be continued or not. But just watch the trend line below right there. And when you look at this, another one, the 21 EMA, so far it's holding above it. Okay, when it's dropped below it, especially a candle close below, normally we get a decent pullback. And so again, it's going to be extremely volatile. I think you're going to see major gap up and gap downs this week. And I mean, it's just so many. This is usually my favorite week, by the way, is during earnings season, is this week right here, because it's so much stuff, so much news and everything. So just buckle up for it. The one thing we all know and can pretty much predict with this one is going to be volatility. Okay, can't predict nobody's earnings. But right now, and if you look at the earnings, look at Tesla. Like Tesla wasn't like they hung the moon or anything. They actually missed revenues, right? But what's the market doing? It's picking out what it's like. Oh, margins were much better expected, and the move is the best move they had in a day since 2013 or something. And that wasn't. They've had way better earnings than that. Way better blowout earnings than that, and still that moved up 22% in a day. So it's about how the market is setting up and just wants to move these. And that's why I look at this as a technical perspective on each chart, saying, well, I mean, you look at a lot of them, it's like they're bouncing, right? And they're set up to really move higher. But then with those trend lines that have held up for so long, if they do break, you will finally get some kind of downside. And we're just in that 2-week window where we know the VIX normally spikes the closer we get to this election, right? And then it subsides over. So when it comes to elections, I've done so much different research on this. The election years are a crapshoot, man. They really are. It's insane. But but that's where we're at right now. Let me know what you think in the bottom stuff. You playing any of these or not? Please hit the like and subscribe button on the way out. Really appreciate it. Think about signing up for the membership. There's everything you get with it. Less than a McDonald's combo. And I'm going to go finish watching my Chicago Bears game. And they are playing like crap, to be honest with you. But, hopefully they can pull it together in the second half. So have a good one, guys.